everybody else rolls in. So my name's Tanner. Met Flav about a year ago. I've been trading for 7 years. Previously worked in investment banking, did risk management and some analytics for a local bank to me here in upstate New York. My main focus is high ADR, technical and fundamental alignment between stocks, swing trading, equities mostly. But when I started, I was doing primarily options to grow the portfolio. So this lesson's good for both equities and options. What I really want to focus in on here is how to identify what's actually a good setup on the daily versus what might just be kind of what I like to call a propaganda setup, where you have nice tight candles all next to each other, but on the underlying hourly time frame or even smaller time frames, you actually have a structural breakdown happening underneath. So we're going to look at a couple of different setups that go over what is kind of loose price action that's going to lead to a breakdown, even though the daily might look really tight underneath like a down trend line, versus something that's actually healthy underneath the hood and shows confluence between those smaller and larger time frames to actually create a nice move. We're also going to talk about how trading around large points of contention is most important, and how you can have a phenomenal setup, but if it's in the middle of nowhere, you're not going to get anything out of it as far as a trade that actually has legs. And that kind of ties in with the first piece about the key point, or the last piece of the key points, which is that not every setup is a trade. So we're going to talk about that as well. But yeah, so I just kind of went over the key points here for this. Let's get right into what Confluence is before we get started. So Confluence is the process in which two or multiple entities come together. In this case, we're going to be talking about how multiple time frames align on a technical chart to create a trade, as opposed to just, oh, this is a great looking daily, or this is a great looking 5 minute, or great looking hourly. Having one of those is awesome, but if you can combine them to create a confluence between multiple time frames, you're going to have a lot higher probability of that actually breaking out and working in your favor. So we're going to take a look at a couple of examples. And strong versus weak confluence. So strong confluence sees the hourly in alignment with the daily. Personally, I like the hourly, and when I say the hourly, I mean the 65 minute. The 65 minute in the daily. That would be a strong confluence. So if I can look at both of those time frames and see exactly the same thing, where I don't have to wait any longer, both of them look like they're ready to go at the exact same time, then that to me is a strong confluence that trade has swing continuation potential. Weak sees a deceptive hourly or daily without supportive level work to make the trade. So again, that's kind of when you'll see a setup and you'll go, wow, look at this perfect flag. And then you zoom out a little bit and you look at where you are in the setup and you realize that, hey, wait a minute, this is a great looking technical flag, or cup and handle, or insert X pattern. But if it's in the middle of nowhere and you don't have multiple time frames to kind of show you that there's continuation potential there, then you're going to have trouble for that trade to find any legs. So let's kind of go ahead and take a look at just the first example, which was one recently that a lot of people that I was familiar with kind of got geeked out on. So obviously the energy trade at the beginning of this year was really strong. This is ExxonMobil. Most people missed this big run up because it just didn't give opportunities. For those of you who don't know, and this is a topic for another time, but energy, when it starts to go, it usually goes all at once and doesn't give many opportunities for pullbacks or anything like that. It doesn't operate like how most tech charts do. So it made this really great move up, and then everybody was kind of waiting for this elusive pullback to come into play and give us a nice down trend line and a flag break. And if you were just first look at this, you'd say, wow, that's really great. You got 3 points of contact to the upside. You've reclaimed your moving averages. This is a really phenomenal look here, right? You even undercut your 10 to 20, bounced off the 50, reclaimed, phenomenal, right? After a big flag pull as well. So it wasn't a deep drawdown. It was actually fairly sideways drawdown. So just on the surface, you look at this and you go, wow, this is a great looking setup. And I had a lot of people buying into this, for the breakout, for this continuation move on energy. Come to find out, you zoom in, you look at the hourly, and you go, oh wow, wait a minute, we've got some underlying problems here, and let's talk about those. So when you're looking at a down trend line and probability of that breaking out, your most probable situation is something where you actually have consolidation right against that down trend line. What you don't want to have is you don't have consolidation into the trend line, because then it almost just acts as like a resistance in that case. Whereas if you're constantly pressing up against it, and let's actually just get over to that chart. And I'll just kind of draw it out. So, if you have, let's remove all this extra crap on here as well. So you'll notice right here on the daily, it's what appears to be a great flag. But when you actually zoom in, you realize that you do have an underlying problem here on the 65-minute, which is you don't have any real pressure against that downtrend line, giving it no reason to break out. And what I mean by that, what I mean by pressure is, a great looking setup is going to be reactive off whatever low it creates in this downtrend line. And then you're going to get something that looks more closely similar to this, as opposed to, what we ended up getting with this. And I'll go ahead and change that color so you can see the difference here. So when you're bidding up into that resistance on the smaller time frame, even though the daily looks phenomenal, because you don't really spend any time against that downtrend line, you're going to struggle to see that break out. So that's why it's important to recognize, like, hey, yeah, I want to be trading and swinging based off the daily, but if you don't have any confluences on those lower time frames to kind of suggest that this thing is ready to go, or it's spent ample time pressing and chipping away at that downtrend line, then you are going to struggle to have that breakout. Let's see another example. That's my Twitter. My bad. Here we go. Okay, so here's another one with ASTS, and this was a little bit different. So XOM was a slower mover, larger downtrend line. ASTS is a faster mover, more of a small cap name that got an EP a couple of weeks ago, and I tried trading this, not right here, a little bit later on, but I tried trading this and it just kind of dribbled upwards. But for the purposes of this example, I noticed this original entry opportunity here where you kind of had this upside down H pattern, and I'm sure a lot of you have seen that on a number of different technical analysis spreadsheets or books or whatever, where you have this kind of H pattern where you have a large move up or down and then a quick little rounded bottom or top to kind of indicate continuation upwards. And this can be a pretty deceiving chart, especially when, again, you take the smaller time frames into consideration in alignment with those larger time frames. So you can see on the daily here, huge catalyst. It was an episodic pivot type move. Verizon gave them like $130 million or something on $1 billion market cap, which is crazy. And then you have a quick little pullback and a bid straight back into that resistance here around 950. So on the daily, you're thinking, okay, great. We have an inside day here. We've got a push against this resistance. We have a H upside down H type pattern. But when you zoom in to the 65-minute, you realize that this might not be as healthy as it might suggest, as the daily might have suggested. So you can see here, yeah, you have a little bit of a downtrend line here that breaks out. But it breaks out and it's a false breakout, right? It goes for it and is unable to sustain throughout the rest of the day and ends up pulling right back in. From there, you have this slow drift up into the resistance, and that should remind you a little bit of that XOM price action where you have this slow kind of drift up into the resistance. So without proper basing at that point to kind of chip away at that resistance, you're going to really struggle not to just drift into it and then fade away, which is exactly what happens. So if you're struggling to find setups that are working for you and you're playing a lot of either downtrend lines or 2 to 3 resistance touches, it's important to pay attention to how those touches are actually happening and zooming in and seeing how they're reacting to that downtrend line or that resistance point. Because I think what you'll often find is, at least this is what I found years ago, is what I was buying wasn't properly aligned on multiple time frames. And to me, without that alignment now, I can't see it now. If I don't have proper alignment, I'm not a big 5-minute trader. I like an hourly or a daily mostly. But if I don't see that alignment of the hourly or the daily, even on like 5-minute, if I don't have a large support or a large resistance nearby to kind of work around, then I think those trades generally struggle versus the ones that are working around large key levels. And we're going to get down to that in a few more slides. So this is another example here of a VGO where on the left here, you've got the daily and on the right, you have the 65-minute. And you can see how on the daily, this looks pretty great. You have a down trend line, you have multiple points of contact along this, you're above all the moving averages, you're just kind of surfing around, right? You even have you just kind of a volume dry up through this sideways price action. And I was seeing traders throughout this period of time recognize this as a potential breakout opportunity, especially after this inside day. But upon further inspection, it's like, yeah, if you can have a great daily, no doubt about it. I've seen a number of phenomenal daily setups, perfect flags, you're above all the moving averages. It hits all the classic criteria of what a good trade is made up of. But if you're unable to find some kind of a tight risk or some kind of a tangible entry against that down trend line late in the setup, meaning anywhere over here on the right side of this down trend line, then that setup is going to struggle. And once you get into the 65-minute, you realize that, and yeah, there's a couple ways you can draw this. You could draw this to those highs, but for the purposes of the daily, I drew it straight through. And you can see, right, it makes efforts at the breakout a couple of different times where it just kind of slams right into it and ends up falling right back into the setup. So after that happens a couple of times, you need this to validate against that down trend line to suggest that there is a potential that this moves out. And it makes one more effort here on the 15th and then ends up slipping through your moving averages one last time and falling down. And if we can pull that one up as well. So again, what we're looking for here, yeah, just like this. So it makes good efforts, but because there's no basing against that down trend line, or insert anything, insert resistance, insert down trend line, because there's no pressure against it for an extended duration, you're going to struggle to sustain higher and actually get that breakout. And also, we're kind of in no man's land here, right? For AVGO at this point, we're at all-time highs. There's not really an indication that we should go up or down. You just kind of have above the moving averages. You're in a top group, which is great. But until we get tight action against some kind of resistance or support, this is what I like to call just some good old propaganda, right? You've got a great setup. Right? On the daily, you look at this, you zoom this out, and you go, wow, what a banger, right? Like, that's a real, let's see if we can even pull this up. You look at it, and you're like, wow, that looks really great. This thing's moving up into the right side, which is exactly what you want to see. You even have, like, a little bit of a peak out there on above average volume. But as soon as you get into the smaller frames, you realize, hey, wait a minute, this is extremely loose price action. And loose price action is the last thing you want to see when you're trying to enter something for a swing, because the most powerful stuff is going to work early, and it's going to work quickly, and it's going to work early, meaning you're going to move out from this relatively fast on that first day or second day. And when you zoom into the smaller frame, you just realize, hey, wait a minute, this doesn't really give a great opportunity. This doesn't look like it could continue to stretch away after even just this one day. Like, even if you were to have bought down in here, you look at it and you're like, we're kind of stretched away here from that down trend line, right? The distance away. Now, if this day had come and this consolidation were occurring up close to the top of that down trend line, I would say absolutely, right? You can clear some of these pivots and you can start that move out. But without any confluence there between those large and small time frames to suggest that this has explosive potential against that down trend line, you will struggle. Where am I going here? Oh, here we go. Okay. So here's one where AVGO not so great. Now we're going to get into a couple of really strong confluences in trades that I've taken over the last couple of months just to keep it relevant. So this was Powell from a couple of weeks ago. Powell was one that snuck away a number of months ago on like an episodic pivot type move over here, right? Breaking out over this large base, and I kind of kept it on the radar. It's also in the power group, which has been a really good adjacent to the AI group. But it ends up reclaiming this large support from the past that I had traded back in February, and then it kind of sets up this base here. And you have the downtrend line, very similar to AVGO. You have a daily setup, a downtrend line, but in this case, you actually have a support underneath, whereas in AVGO you didn't. You just had a loose, wide open bottom, and I'd much rather have a stiff support to kind of give me a realistic risk-reward versus just kind of an open-ended bottom where I have to be more reliant on moving averages to determine my stop loss. So in this case, just looking at the daily, and when I had noticed this one, it was, I want to say it was like here. So all I had seen was this. And if we go ahead and zoom into the 65 here, at the time that I first picked up on it, it was right in here. And I'm looking at it and I'm thinking to myself, okay, I'd like to try this and see if we can get a breakout. So ended up giving it a whirl, right around the open here, and got closed out of it within the next hour. So failed, and I was like, okay, needs a little bit more time. Ends up pulling back over the next couple of days, retest this low area, which would have been a great entry as well. But then it provided what I considered to be, that confluence that I was looking for. And if we zoom out to the daily, you can see exactly what I'm talking about. So on the daily, you have this kind of, it looked good on this day, but then it looked, crazy good on that day. And that was kind of one of those instances where it's like you give it just that extra time, that almost where you're like, I'm giving this too much time to work out, but then it ends up shaping up incredibly, and it really makes what is like a 5-star trade at that point. You have a reclaim of all your moving averages, light volume throughout throughout the entirety of the pullback. All your selling is super light, and on the 65 minute, I mean, you can just see a night and day difference between this and AVGO. In AVGO, you had much looser price action that was pretty far away, or your moving averages being pretty far away from that down trend line. Whereas in this case, you actually have those moving averages pressed right up against the down trend line with price right above. So this little pocket here, where you're still below the downtrend line, you're still within the setup, but you're above all those moving averages, and you kind of have the convergence there, plus the time frame confluence. I mean, that's a super explosive setup right there, and ended up buying this breakout. And like I said, the good stuff's gonna work early, and it's gonna work well, and it did. So you get away, and within that first hour, you're at and clearing that initial pivot, right? Which is just kind of this local resistance. Pull this back. I might have something here as well. Yeah. So again, right, your best stuff is going to work early, and it's going to work well. And when you combine that with a solid entry that is breaking out from the down trend line, and not like a VGO where you were really breaking out from within the setup. Anything that you're breaking out within this type of setup, like, don't get me wrong, this is great. And I'm sure there's a lot of people looking at this going, well, what about that really nice looking downtrend line within the setup? That's awesome, but you're never going to get a duration breakout from within the setup like this, where you're this far away from the downtrend line, right? You're either going to, this is something that either comes in and retests and then continues higher, or just needs time to actually hit that downtrend line and make it work from there. So, yeah, again, night and day difference between that and Powell there. But let's take a look at another example. So here's another example of a recent trade on MSTR. Let's get that pulled up. Down in here. And now there are actually two that look very similar in the video. If we have time at the end, I can throw that one on as well, but I didn't want to put on too many slides. But in the same time frame, there was another setup. So notice here, right? What's similar about this to that Powell trade? You're against a support. You're in a top stock and a top group, because again, if you're not trading top groups, I think, at least for me, I'll struggle quite a bit. I want to be in the most liquid names and the stuff that's doing the best. So crypto was super hot at the time. It still is, but we had this kind of fake out downside, false breakout to the downside, and people tend to neglect the false breakdown. People are only worried about false breakouts when, I mean, the false breakdown can be a phenomenal indication of continuation the other way. In the same way that a false breakout is an indicator of something probably going to slip down. You see we have this false breakdown on earnings, V-shaped recovery in 4 days, so great, and then immediately tightening up on top of support and giving another one of those confluences. So you can see here, the daily looks decent. It doesn't look as good as some of the other ones that we've seen, but the daily looks pretty good. It's reclaimed its moving averages. there's something to be said here. It doesn't leave too much to be desired. You get in on the smaller time frames, and you realize, wow, okay, this actually looks better on the small frame than it does on the large time frame, which is great. I mean, the large time frame looked good. You zoom in here, and you're like, wow, this is even better. And you can see just how consistent this is in getting tight and making efforts, right? Got tight here, made an effort higher, obviously failed. Got tight here, made an effort, it worked, and then now we're kind of tightening up against that down trend line, and that's kind of your breakout point. So I ended up buying this one into the end of the day on that breakout there. If we go ahead, let's see if I can get the 5 minute all the way back there. Oh boy, lagging out. All right, yeah, here we go. So you can see even on the 5 minute, you have a really strong setup, right? You have an effort at rolling over. You put in a bit of a bear flag against a bit of a bull flag against that down trend line coming off of it. It quickly reclaims moving averages after undercutting all three, and then you're just setting up another tiny, nice little bull flag after you kind of undercut, reverse, and then set up. So on every time frame, you just have spectacular price action, and to me, that's the making of what is a great trade. And this one ended up gapping out of the setup and making a pretty sweet 40% run in 4 days. So the more confluences that you can get across time frames against large supports to give you that kind of backstop on the trade is going to be a big edge in your technical game. And then from there, you're mostly just focused on, like for me, it's finding the technical edge through Confluence on multiple time frames, and then only trading the most liquid and trendiest quote unquote stocks, the stuff that's doing the best or in the top performing industry groups. But let's keep moving right along. We'll do some questions at the end. So again, just to kind of close this out on notes, why technicals on mid-tier timeframes need to tighten to work. So I'm thinking AVGO here, right? The daily spectacular. I know so many people were posting this on Twitter. Oh, look at the AVGO setup. If AI is going to continue, this is going to do really well, blah, 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 blah. You go and you look at it, you go, okay, well, let's see if I can find an entry on this. You look at the hour, you look at the 65 minute, and it's a fucking disaster, right? There's absolutely nothing here to call home about at all. And, this is where a daily can be super misleading. And it always starts with that larger time frame. But if you're just buying based off that, it can be troublesome. So I like to zoom in and take a look at the smaller ones to make sure that there's conviction there as well. So again, wide technicals on mid time frames, meaning 65 minute, half hour, 15 minute. If you're wide through those time frames, you can't expect the setup to work out. You need to be precise on those smallest time frames, or else it will struggle. Entering on top of or against support and resistance bands gives reason for actionable moves. That's what we're talking about with MSTR. You have this support as your backstop. For Powell, same thing, right? Even if I don't generally buy the supports, but I like to see that they're there in case the setup is starting to work against me. Maybe I can give it a little bit of a leash if maybe it's slamming into it from the top, right? Like if this were to dump out from the down trend line, I could expect it to bounce there. So I'd like to see that there's at least something there that gives way for the setup to still remain intact, despite maybe breaking down briefly in like a morning open or a market sell-off or something. And then watch for false breakouts at downsides and reclaims on volume to suggest the setup is ready. The undercut and rally is like all time. I mean, it's phenomenal. You're going to see that so often on so many setups, and usually right after the undercut is when you're going to get the rally. So you can see here on MSTR, right? Bounce, 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 undercut, right? Here's your undercut, and then right after it is your rally that ends up being the breakout point. I use the 65 minute instead of the hourly because if you do the math, if you do the 60 minute, you'll actually get 6 1 hour long candles, and then you'll have the half hour at the end of the day from 3:30 to 4. So instead, with the 65 minute, I just get 6 evenly sized candles. And yeah, it's not technically an hourly, it's an hour and 5 minutes, but it makes your chart a lot more whole on a full day, as opposed to having that random like half hour long bar at the end of the day. So I'm a big fan of using the 65 minute. Yeah, it's definitely worth using over the 1 hour in my opinion, because it just creates a lot cleaner. Like it's impossible to. I don't know. I don't like looking at a. If I'm looking at an hourly, I want to see hourly bars. I don't want to see a random half-hour bar at the end. Big takeaway from this. I just got water all over my keyboard. um, Big takeaway from this though is the first point that I made in the key points. Not every setup is a trade. You might see a lot of tight price action that looks phenomenal, but ultimately amounts to nothing. And a good example of that is like App. A lot of people were all over App recently for its setup that it had, and this thing has stopped a lot of people out trying to buy these breakouts. I know a lot of friends who have gotten stopped out on that, gotten stopped out on that. When you have this kind of wide price action like this, especially after such a significant run, it can be tough to get a full breakout there. Whereas early on in the setup, this thing had a lot better opportunities where price action was actually trading a lot cleaner, and you did have a lot more confluences between those time frames. What time of day would you look to swing? So I try not to enter any of my swings between 11:30 in the morning and 1:30 in the afternoon. I'm in front of the desk all day, every day, no matter what, 9:30 to 4. And I found that the best times that I've entered are either right around the open, meaning like first 10 minutes, or towards the end of the day, like in the afternoon. Because you can have some stuff set up really well during lunch hour and then start to push out in the early afternoon. So I'd say early afternoon, like 1 to 2 p.m., or early morning, 9:30 to 10:30. But I do still think it's very important to be at the desk all day, which I am, because there's a lot of opportunity that comes and can sometimes sneak away when everybody else isn't paying attention. How do you pick your exit? How do you know to stay in positions post breakout? So that's where we're talking about. We're kind of going away from the Confluence, but I'll just touch on it real quick. So for my equities, I'm either using past price action or I'm trailing moving averages. So like in this case, this was pretty straightforward, right? Powell had a PT1, which was this little pivot that it got stuck up on earlier on in the setup, and then PT2 is your high. So as far as risk reward goes, if I'm getting stopped out beneath all these
Oh my
moving
God, I can't
averages,
believe you have. Jesus Christ.
if I'm getting stopped out below these moving averages, I'm down here risking about 1% through these lows, or through all three of these moving averages on the open. First PT, you're about 6%. Second PT, you're about 11. So that gives great risk reward. So if I'm trading something with previous price action, then since I trade in lots of 1/3, I'm looking for PTs that exist in the past. So in this case, it was all the way through from 1 to 2 to 3 up to the previous all-time high. If I'm trading something that's breaking out fresh, like NNE, this is a really great example because this was one of my better trades of recent. Um, so bought into this crossover of all three moving averages after it undercut, reclaimed, and then pushed out on strong volume. And actually, this is a good example of confluence between a 5 minute and a daily. So you can see here on the 5 minute, you know, price opens up and look at how quickly it's pressing against that downtrend line. Whereas in the past, right, it's made efforts at the downtrend line, but it has never properly pressed against it with any volume to support. You can see the difference here in volume. You have almost no volume here despite some large selling, and really just sporadic. But then through here on the open of this Friday, you have a dozen candles all next to each other, all with above average volume, or the majority with above average volume. So on the 5 minute here, you have confluence with that daily. But then this one gets to all-time highs pretty quick. So when you're talking about picking a price target on something like this, after it's starting to break out, you're really using your moving averages to trail. So in my case, I'm using first what I have. So that's your all-time high. That's number one. Right. Then from there, you're looking for extension, which in this case for me was over 100%. Like to me, that was just extension. In 2 days, we got huge extension on this name. I mean, it was up 100% in 2 days. So I'm selling some into that 100%, which was right around here. And then really I was just trailing the 10 because on these high ADR names, I don't want to give up too much. So I ended up getting out of the rest of it shortly thereafter. And obviously this thing ended up going on to run another 2x from there. So that was a real blast in the mouth. But yeah, if I'm entering anything like this, utilizing these confluences and utilizing down trend lines, I'll use what I have existing for price action first, and then after that I'm trailing moving averages, which can get finicky. No doubt about it. I definitely leave some gains on the table, but also it's saved me a number of times as well.
They just hacked into what's his name's account? More Cubans. You gotta be really diligent.
Flav, can you mute this person?
Yo, who?
Those are the main ones.
I think
like
it's
that's
LLLTTE.
Let me-
Like this guy's a fucking weirdo, really. And he's in another
All right,
country.
what about now?
You can't let people like that
You
weirdos
just
follow
gotta
you.
you just gotta mute it.
I'm telling you.
Muted them.
I think you muted them personally. You gotta server mute them.
Redneck Joby.
Give me a second. All right, done.
Nice.
What
Does
about-
anybody need me to
We're
repeat
good?
that? Yeah. Does anybody need me to repeat that? I had muted them earlier, but if anybody needs me to repeat anything, I can go back.
I swore I muted her earlier. Oh, weird.
Yeah, so if I'm trading something that has historic price action, blue trader, I'm looking for past points of resistance to use as price targets, because that's just where you're going to find the most trouble usually. Points of contention from the past. And then after that, I'm just trailing moving averages. So if it's a super high ADR name that's moving quick, I'll trail the 10. If it's something that's maybe moving a little bit slower, like a large cap or a mega, I'll trail the 20 or the 50. And also it depends on this type of trade that it is. So if I'm trading something that maybe has institutional legs, right? Couple of quarters, maybe an EP, and there's institutional sized volume rolling in there, then I'll certainly use a looser trail like a 20 SMA or maybe even a 50 if I think it's got legs for a couple of weeks or months. But if it's something like this, which this is a fresh IPO, just came to market, it's a nuclear name which was on theme, but I didn't know how much it would run. I was just trailing the 10 here. I didn't think that this would be much more than like a small cap 100% runner. Ended up going much further, but that's just the way it goes. Was that going on the whole time for like the last 40 minutes? I wish I had known.
Yeah, I didn't hear anything though on my part.
Pretty much. Oh, dude. Oh man. Okay. Well, the recording will be the recording doesn't have that on there, so you'll be able to get it on that. I apologize. That's how it has to be, but I was unaware. Oh, only lasts 5 to 10 minutes. Okay. Cool. Any other questions on this though, as we kind of roll through? Anybody want to see more examples or have any questions with what I'm talking about here? Because if there's one thing that I see a lot of, it's people that are like, oh, look at this great bull flag. They enter and like, well, why didn't it work out? And you zoom out to some of the other time frames, and you just realize that it looked like total shit on everything else. So it's important to recognize that you need to have Confluence. Take a shot every time I use Confluence. Yeah, I use 10, 20, 50 SMA. I keep it really simple. To be honest, a lot of times I don't even have the moving averages on. But yeah, if I'm going to use them, I just use the most popular ones, which is the 10, 20, and the 50. Example on Rivian? Yeah, sure. I traded Rivian a while ago, and let's see if I can find that example. Yeah, through here. Okay. So let's see if I can get back that far. Ooh, November, that might be a little far. Oh no, it's good. Okay. So this is a trade that I had taken on Rivian a while back. Let's get this let's take a look at this. And we'll see. So the daily had a rounded bottom against this this 18 level. And what we're looking for here is we're looking for the hourly to kind of converge on that daily and make it make sense for a trade. Let's get this sped up a little bit. Okay. Okay, so immediately we're reclaiming, and now we're starting to respect those moving averages again. So you can see through the middle part of this, you have no respect. You're slicing right through them in every which way, and then suddenly you have your first respect of the 50 SMA there. So I'm looking at this, and I'm going, okay, I want to see more tightness against this 18 level, and then if we are going to break out, it needs to break out with enough force to get over this 1876 area here, this previous high. Yeah, perfect. So as soon as we start to respect, you have a rounded bottom on the daily. Can I go to the daily without this fucking up? Yeah, okay, great. So you have a rounded bottom on the daily. You have a nice sideways move. You're not exactly... So you can see here, right? On this one, you bid up into the... Let's get rid of the moving averages here. On the first touch, you bid up into it, but you have nothing to signify that a breakout's coming. Right? Because you have no sideways consolidation to signify that. So you fade away. On the small time frames, after you let the daily play out, obviously you can see that, you immediately come back in on volume to try again, and it rejects again. And then when it does finally go, you can see that it breaks out with conviction. Right? You get the volume to suggest the breakout's upon us. Right? So you have the nice little hourly flag right up by that resistance, as well as the daily consolidation that's occurring after you've already rejected once, digested that rejection, and now you go for it again, right? And then even after, let's say you missed that, this is supportive. If this had broken out from down here in the mid 16s to 17s, it wouldn't be nearly as strong, but because it broke out from close at the very top of that range, you have a much higher likelihood of continuation there. And then you can see shortly thereafter, you end up getting another nice little high tight flag. Throw some averages on here. You can see it's just surfing the 10. Let's continue, see what happens. Ends up retesting one more time, and here you get this undercut, right? Undercut in reversal, and then your blast off. That was my most recent Rivian trade. I tried Rivian today actually on that EP news. I was expecting this to do better. I mean, Volkswagen gave them $5 billion on a $11 billion market cap stock, but it ended up fading down. So I took like a 1% gain on this, bought into these lows, took off 1/3 at the high, and then closed the rest there. Get into a swing, they say it's not ready. I didn't understand why after looking at the daily chart. Yeah, sometimes the daily can look great, and you just don't have it on the hourly. Like, let's take a look at VST, for example. A lot of people were expecting VST to move out and away from this 10, 20, and 50 here. On the daily, you can see it rounding down below. But on the hourly, you get in here and you realize this is crap, man. There's nothing here that indicates that this wants to go. You don't have any pressure against that downtrend line one bit. And if you compare that back to the breakout down in here, you can see that you have the bid into it. You break above. You make a sideways move. You don't reclaim, or excuse me, you don't fall back into that setup. You actually hold above the setup. You open down low and you quickly fill up. This is like an oops reversal type setup. You oops reversal back through the entire day on high volume and then continue from there. So unless your hourly is in confluence with the daily, you're going to struggle. So like the VST setup here, I mean the daily on this VST setup was insane. I've traded this a number of times, but you can see here, right? Nice bull flag, undercuts the moving averages, makes one last effort to fall back into the setup. You get that oops reversal back up through your 10 and 20, and then continuation from there. And it's supported by the 65 minute, right? And I don't think I can go that far back on the 5 minute. Let's see. Oh yeah, here we go. Right? You can see, your differences. So like here, you bid up into the downtrend line and you immediately reject because you don't spend any time there. But then here, right, look at how much time is spent just pressed up against it. You get that clean rejection there, which makes sense because it's the first one, just like this one was back here. It's the very first attempt. But then you see how quickly it snaps back to try again. You even get a little excited here throughout the middle of the day and try and make the breakout. You can't, but you stick right to that area, continuing this kind of consolidation. And then the gap up kind of confirms it. And then if you needed more confirmation, and a lot of people would be scared buying something like this, but to me this is just more confirmation after the setup is panned out for this long. You try to break down back into the setup, and you quickly reclaim. I would have no problem buying it in there. Now I bought it in the setup back in here, but I would have no problem buying after it reclaimed everything, because to me this is just as strong as if it had opened there, right? Opening here is actually, in my opinion, I'm more excited to see it open way down here and fully reclaim than to see it just open straight up in here. Just me personally. But let's see if I can think of another example here on something that I took recently. Like IREN is a good one. Okay. So if you take a look at IREN down here on the 65 minute, you can see, let's get replay mode on actually. You can see where the setup goes from loose to tight and the daily is in alignment and then it breaks out. So let's take a look at it. Let's get on 3x for this because it's a pretty short one. So you can see, right, puts in this first high here. We didn't know it at the time, but that was the high for the range. Right, you watch it, you undercut the move. It has no respect for the moving averages initially. Here's the support. You can see you got 2 points of contact. It's not strong yet, but it's forming. And you can immediately see now, okay, we're rejecting this area, so we might spend some time here. Price action's still extremely loose, right? It's pressing up against that high, but it won't break through. Falls back down, undercuts at 10 and the 20. Even more. Undercuts, tries to undercut the 50 there, doesn't. And now you're kind of looking at it like, geez. We're kind of in the middle of the range here, but this is high and tight. We're up almost 60%, and we've got 5 days of consolidation at this point. Let's throw on some inside bars. Let's see if we got any of those. Yeah, so you got an inside bar here now breaking to the upside. You're on top of all your moving averages. So you have this moving average pinch, and you have price action going from loose, like this, to suddenly, that's not what I wanted. To suddenly, all of a sudden, it's just tight right on top of those moving averages. And the tighter you can get on top of moving averages, the more explosive your move's going to be. So I like to see something like this come in if I'm going to pay attention to it. Now here, I ended up not taking this and whiffing it, which was just a huge mistake on my part. But this was right in the middle of the range. I wanted to see this a little bit closer to the top, and that was my mistake. And then not buying the breakout was just a double mistake. But you can see here, right? You end up gapping out, and then I'm just like, geez. Well, now I've just missed it, right? You gap up 5% out of the range, move 20% in the first hour. A little discouraging as far as entries go. And then the next day actually looks terrible, right? This is an awful looking daily candle. But on the hourly, it's just a retest. And then sure enough, it ends up ripping from there. But you can see here, right, how you end up going from, obviously hindsight's 2020, but you can see how we go from loose price action on your small time frames to tightening up on your small time frames to indicate the breakout. Whereas if we take a look at the daily, you can see exactly that, right? On the whole daily, you're thinking to yourself, wow, this just looks good, this just looks good, this just looks good. but you actually need to get into those smaller time frames to see what's going on, and then you'll recognize that hey, wait a minute, this thing's really ready to go, and it was ready to go, and I ended up whiffing it. But yeah, another pretty good example there of that. Anybody else? Questions, comments? I'll give it a couple of minutes if anybody has anything. I'm happy to answer anything else too. I know I don't spend a whole lot of time in here. It gets kind of busy trading during the day, but I try and pop in when I can. Good call. So NVIDIA set up something similar to MSTR back in May, and this was a trade that I had taken with MSTR as a core position here. So you obviously have, I mean, this one even shows a small time frame set up on a large time frame. So you have this undercut here, reverse back through the moving averages, reclaim, and then make a nice tight little setup there. So let's get a replay back and we'll take a look at it of kind of why I liked it. So obviously you have, it's top stock, it's moving well on the daily, it's undercut the daily moving averages, reclaimed them. So it's starting to show the signs of exactly what we want to see. We go ahead and let this play out. Let's take a look. So again, loose price action all through here. Nothing really to call home about. Immediately we're starting to build out this DTL. And this is where things start to get interesting. And when you're kind of starting to be reactive to the 50. Because down in here, no respect for the 50. Cuts right through it. Has no problem. You're breaking through it with no issues. You're breaking down with no issues. But then all of a sudden you're starting to get more reactive against it. So let's see here. Yeah, and now we're just kind of bouncing off there. Can't undercut, right? Tries again. Okay. So then you have your moving average alignment. You go from undercutting your 50 all the time and really having no respect for it at all to suddenly you're just respecting the hell out of it, right? 2 days back to back, you make efforts at it and you have no success breaking down. So to me, that's a great sign. You got a nice round on the hourly. I like to see roundness is a great indication of continuation for the direction that the roundness is pointed. So in this case, right, you have this roundness like a normal cup. That's generally a pretty good one for upside. So I like to see that. And then on the daily, I mean, what a confluence. The daily is just spectacular. You have earnings coming up, so you can expect to see a little bit of a run into that. For anybody who hasn't picked up yet, if you're a money manager and you don't own NVIDIA, you're getting fired by the end of the year. So to me, it's been interesting to watch that NVIDIA's earnings, the call, none of it matters, right? It's the top stock in the top group, and I think every money manager is getting this in the portfolio, or at least has been for the last couple of years. And being bearish on something like this is just foolish. So, with all those factors considered, you have your reclaim, you have your nice daily price action, and then an even better looking 65-minute. Sure enough, you get that move out on the next day, and then, obviously it gives you a nice cushion into the earnings, and then boom, you get your breakout. So, nice little trade there. I see you're trading with after hours and pre-market data off. How much value do you place on pre-market and after hours support resistance levels for 1 hour trades? These things not matter when you're swinging. Yeah, Flav might kill me, but I don't think I've ever turned on the pre-market or after hours. I don't care at all about it. There's no volume there, so why does it matter? Right? He's gonna. He will, but it doesn't matter at all, actually. I don't think it matters at all. I think it's totally worthless. But you're right. I mean, every something works for everybody. That just doesn't work for me. Also, it's so ugly. Oh, the candles look like shit. It ruins all my setups.
Hey, brother, do you mind going over NVIDIA's an analysis for NVIDIA's next move?
The next move. Sure. Like, what do you mean?
As far as just like our price action for the past maybe
Sure.
3 or 4 trading days, we're breaking under EMAs on the 4 hour. We're not getting a crossover on the dailies. We have a first red weekly candle. So I'm interested into see what you have to say about it.
Yeah. Yeah, so I mean, coming off of those earnings, you were definitely getting a little bit heated. As far as distance away from like your 10 and your 20, those were some of the most stretched they've been in the entirety of the setup, or excuse me, in the entirety of the run since early 2023. So the pullback made sense and was definitely in order. I can pull some receipts, but what I liked was the hold on the 10 here. So first made note of it when it was just sitting on the 10. And to me, right, you can see it closes below the 10, but until I get like a full candle below on its own, I'm considering this to be a hold of the 10. So it ends up pulling back up through. And now we're just kind of pinched between the 10 and the 20. This is not actionable to me at all. The last time that NVIDIA was actionable was back in this little consolidation here, this 5 days sideways, right before the split. Now it's just like, it's kind of in no man's land again, right? Regardless of what the moving averages are doing, you don't have any price support at all. If I were to go into smaller time frames like a 65 minute, kind of getting reminiscences of a bear flag here, starting to build out. So I don't really know what's going to happen. To me, it's not actionable, and it hasn't been for the last like 2 weeks since this setup right in here. So I don't really have too much for you. This is not the type of setup that I'd be buying. This really isn't for me. Like, I like to buy tight price within larger setups like this, or something that's just starting to peak out and is maybe 1 or 2 bases in. But now that to me, this is the true pivot. We're 40% away from the pivot on the biggest stock in the market. It just doesn't seem like the risk reward is there to really have an eye on this until this can either flush out and set up again, or it can start to reclaim some of these upper levels and make a higher low, you got to get creative with it, right? Start to push up and chip away. It's going to take a while to chip away this volume, by the way, for what it's worth. So I think it's going to take a while to chip that away. You either want to see this reclaim up here into the higher levels, put in a higher low and do something like that, or you would need this to flush out, undercut everything, reclaim, and then try again from somewhere in here. But at the moment, there's nothing here that gives me any indication that this should even be on my watch list. Because again, I'm always of the opinion that I'm comparing what a current setup looks like versus maybe what I've traded on it in the past. And, I'm looking at this price action up here. And even if I'm bullish on NVIDIA, even if, whatever, who cares, right? Whatever your catalyst might be, I look at this price action and I can't in good faith buy this, knowing that a month and a half ago I bought this down in here, which was just significantly better. Did that answer your question? Maybe not, but
I agree for sure. I like to also trade, like when we're coming up to those all-time high levels, in the breakthrough, because usually when that does happen, it's a good time to enter for swing trades, and you pretty much hold it on a stock like this.
Yeah, right. Like a good example of something kind of at all-time highs that's not reminiscent by any means other than technical, but when you have something just kind of ripping into all-time highs, I think back to VST, which gave, I don't know why I just deleted all those, crap, hold on, which gave ample opportunities at all-time highs. That to me was clean price action at highs that made sense to be buying into. You can see here, once you clear this all-time high pivot at $27, you're jumping right into some great looking flags, right? You flag into the 10, nice and tight. I don't think this is August 2023. I don't think I can get the hourly back that far, but nice and tight on the daily, breaks out. Immediately right into another one, high and tight, breaks out. Immediately into another one. So buying these, I have no problem either holding through these or continuing to buy this type of setup because they're so clean and they're so consistent, and no one looks that much better than what's happened in the past. Now, obviously, your primary pivot is down in here, but what we just saw in NVIDIA was nowhere near as clean as these all-time high type flags. So when I look at NVIDIA, I would need to see some really clean price action up at the top, which we just didn't get because we almost had that kind of like parabolic short look where you gap a few times and then bearish engulfing through a candle with on high volume, which is what we got like 4 days ago, I think. So it just kind of invalidated any possibility for me to want to buy that for at least a couple of weeks while it digests that price action. Whereas, something like this pushing up to all-time highs, or I could probably find another example too, but something like this where you just have consistent high type flags with no real outsized volume, right? It's just relatively consistent throughout. I mean, other than this one big day here, I don't know what that is, but relatively consistent throughout, respecting its moving averages, not getting too far away, stretched from those moving averages, and just continuing higher. And I think that's why this has been such a nice long-term success and such a good trader for me, especially. Whereas NVIDIA, it doesn't give a ton of opportunities like that because it's just so erratic. I mean, how are you placing entries on stuff like this? It's so gappy, number one, and you just have volume all over the place. I mean, nothing is indicative of continuation given this volume profile at all.
One also to look at now, we finally been getting those moves. Apple.
Yeah, this is starting to shape up. I'm not a big Apple fan, to be honest. I've never been a big fan of trading it. But yeah, you're against the 10 here. Nice reclaim outside, inside to upside today, it looks like. But still, this looks kind of loose, right? Like this doesn't jump out at me as like, oh, this is certainly going to continue. It's been active, there's no doubt about it, and you kind of have this down trend line starting to build out. But if I get in here on any small frame, I mean, none of this jumps out to me like, oh yeah, we're going to 220 or 225. Right? Like I'd need this to either undercut again and then reclaim and then do something tight in here, or break out, clear through some of this stuff. Like we have economic data at the end of the week, so it may do it. Clear through some of this stuff and then start pressing against the high for a continuation move upwards, Like maybe something in here. So a couple of different scenarios there, but to me, nothing actionable here just yet. Patience is everything for me. Anybody else questions, comments, concerns before I cut the recording? We're coming up on an hour here, so I don't want to go too long. Oh, also, I have a Twitter. If anybody wants to follow my Twitter, I just post videos of me at the dog park talking about stocks, or just posting charts and stuff. I don't have a paid group or anything. It just post, and a newsletter, but that's also free. There's some QR codes, I think, down here somewhere. Yeah. Thanks, TP. No problem. All right, I'm going to go ahead and cut the recording. I'll stay on for another couple of minutes just in case anybody has anything lingering. But yeah, thanks for coming, guys. I really appreciate it. Flav was always asking me to be in here a little bit more, so I'm happy I could get in here and get a class done. I've been looking forward to doing one for a while. We've been talking about it for a few months, so happy we could get it done, and thanks for everybody for coming. If you have any questions, you're welcome to just DM me, or I'll hang out on voice for a couple more minutes, but thanks again, and I'm going to stop the recording.